So you created a business, now what? For those that don't know me, my name is Esma Rubio and I'm an enrolled agent with the IRS. No, I don't work for the IRS, quite the opposite. I use a tax code to help business owners pay less in tax. So you created a business, what would be the first step? First step is to create your LLC. The LLC can be done online through the Secretary of State website for your corresponding state. There is a little bit of terminology that you have to understand. One is, what does LLC stand for? First, it stands for Limited Liability Company. So you don't have a corporation, you have a company, Limited Liability Company. The next term is incorporator. So the incorporator would be the owner of the business. Also, the LLC is made up of members. Members are the owners. It's just not going to say who is the owner. It's going to say who are the members of the LLC. Once you finish this step, you would get a certificate from the state. Once you get the certificate, then you can go in and do your EIN application with the IRS. The reason that you want to wait until you actually get the certificate is because sometimes the names could match or be very similar to another existing business. So the state will let you know if they don't allow that name and you have to adjust your business name. Once you have your LLC certificate, then you go to the IRS website and apply for your EIN number. It's free and you instantly get your EIN number. Once you have these two items, your LLC certificate and your EIN number, the third step would be to create an operating agreement. The reason that you need an operating agreement is because the LLC, when it got created with the state, it didn't ask the percentages of ownership. So if you have more than one owner, the operating agreement will be proof of if you're 50-50, 80-20, or if you're just the only owner that you own 100%. So most banks are going to want you to have your operating agreement. These operating agreements are available for free online. You can find a fill-in-the-blank operating agreement. The next step is, once you have these three documents, now you can go to your bank. Go to the bank, open a bank account just for your business. Now, this is a very important step that a lot of people get so tied up creating the business, but then they forget the bookkeeping part. So it's going to save you tons and tons of headaches later on if you do this step correctly. You open your business bank account and you use that account for all your business expenses. So when you get paid for your business, you'll deposit it into the business bank account. And then you'll make all your expenses related to the business with the business bank account. This allows for you to be able to have all your expenses listed in just one report, your bank statement. So your bank statement will have all your business expenses. The issue that a lot of business owners run into is they start paying with their personal account, and then you're having to look for receipts and you paid with a different credit card. So it's better if you just use one account for all your business expenses. A common question is, what if there's not enough income coming into the business? You can do an owner deposit. So most of the checking accounts start with an owner deposit. So you put in money into the bank account. You don't have to pay taxes on that money because that's your own money. You just have to make sure that you're keeping track of which money is your own money going into the account and which money is business income coming into your account. So if you have something that you can link to your bank account similar to QuickBooks, then you can categorize all your income and say that his owner deposits, the rest are business income. So anytime that the funds are low, you can always make a deposit from your personal funds into the account, knowing that you will not be taxed on that money. Another common question that we get is, what about owner pay? How can I pay myself from the company that I have created? Here is where the LLC offers a lot of flexibility, because at the end of the year, you're going to pay income tax on the profit of your business. So you'll report the income coming in and then all the expenses, and then you'll have the leftover, which is the profit. It doesn't really matter if that profit, if it's all sitting in your bank account, your personal or the business bank account. You're still going to have to pay taxes on the profit, regardless if you took it out of the company or didn't take it out of the company. So that is why it doesn't really matter how you pay yourself. If you pay yourself monthly, weekly, if you take all of it out, if you don't, because at the end of the year, you'll still pay taxes on the profit. So it offers flexibility because at the beginning, some of them might not have the cash flow to be paid on a weekly basis or a monthly basis. So as the money starts coming in, you can start paying yourself. So it could be through a check, ATM, or a money transfer. It doesn't really matter how you pay yourself. Of course, as your business starts growing, you want to have consistency so that you know that you have enough income from your business to pay all your personal expenses. So remember, at the end of the year, you'll have to account for all your expenses. So it's going to make it easier if you're using that bank account for all your expenses. You can do your bookkeeping off your bank statements. Having the bank statements also provide a second layer of paper trail of what the money was used on. Another very important reason that you want to separate your business expenses from your personal expenses because there is something called piercing the corporate veil. If somebody were to sue the business, they can't touch their personal assets, their personal bank account, personal vehicles, personal house. But if they're using the business bank account as a personal bank account, meaning that they are mixing personal expenses with business expenses, then the courts can say, you know what, you don't really have an LLC because you're mixing all of these expenses. So that is another important reason why you want to keep it separate. When your income starts going up, then that's when you want to incorporate more tax strategies. So the number one tax strategy is becoming an S corporation. But you need a tax advisor to help you with this. And also they can help you with a lot more strategies to pay in less in tax. So it may be necessary to change your accountant. The accountant that created your LLC and did your first couple years tax return will not be the same one that should be helping you once you actually start paying in taxes to the IRS, because now you want to be able to pay in less tax and have an advisor. Follow for more tax guidance for business owners.